Good morning. I'm Manju Ganariwala, and along with Lara Abrash, I serve as the co-chair of the FAF Standard Setting Process Oversight Committee. I'd like to welcome our stakeholders observing today's meeting and a few announcements before we move on with our agenda. And these are our quarterly announcements. Want to remind everyone of our due process correspondence procedure and form, both of which can be found on our FAF website. As previously expressed, these measures are meant to make it easier for stakeholders to raise potential concerns about compliance with the due process procedures of the FASB and GASB. Also, I want to direct our listeners to the agenda meeting materials for the session. You can find these on FAF website also under the Meetings and Events Calendar subsection. Now, moving on with today's meeting agenda, the committee will cover the following items: report from GASB, followed by report from FASB, FASB liaison to the PCC report, PCC meeting observations report, and other meeting observations reports. So let's begin with our first topic, the GASB report, and I'll turn it over to Chair Black.
Thanks, Manju, and good morning, everyone. Great to see you. Really appreciate you making time to hear about what we have going on at the GASB, the activities, and how we've moved our projects forward through our due process. On master page 108, there are kind of highlights for the quarter, 3 of which are related to standard setting projects or other activities we have that have made probably significant, although all projects have moved forward in some way during the third quarter. These made more significant movements, and we will talk about those as we get through that throughout our presentation to you today. The 4th item there is that we did at the beginning of the third quarter welcome new board member Robert Scott. Robert, as you remember, comes to us having served 10 years on the GASAC, our advisory council, including 6 years as a chair, with his term ending in 2021. And so he certainly was knowledgeable about our process, but we did have a lot of good meetings with him, project team meetings with him, to bring him up to speed on all that we've been doing prior to his term starting. But Robert certainly very much hit the ground running and is providing great input really from the jump on the projects as a new board member. So then moving through our technical plan, starting with an overview of our agenda on master page 110, you'll notice no changes. The board did approve the technical plan during the third quarter for the final third of 2025 and made no changes to the projects that are on that plan. So the things we were working on at June 30 remain the things we were working on at the beginning of the fourth quarter. As we go into master page 111 and you look at our largest project, the only one we have that is a comprehensive type project, our revenue and expense recognition project, we are moving that project forward. It is very broad in its scope. And as you know, Manju, in reviewing the materials, pointed out, maybe we could put a little bit more time frame on here because it's kind of exceeded our time here and will be until it's issued, but that doesn't mean that we aren't moving forward with the project. So maybe we could put a little bit more time frame on the slide here. But in approving the technical plan for the final third of 2025, the board did include in there a revision to the revenue and expense recognition project technical plan where we said we're going to break apart an exposure draft, which is the next step in the due process, into 2 parts, because it's really going to be a very large document for our stakeholders to kind of ingest and really dig into, to understand it and give us feedback at a detail level about what's included. And so the idea being that in mid-27, we would do the first half of the exposure draft, which would cover, this project is very broad, covers most all revenue and expense transactions, even starting with how do you categorize those transactions between currently you'd think of as exchange and non-exchange, and then provide more substantive guidance for those exchange transactions for which there really isn't a lot of literature in our current standards, and then really try to simplify or make less complicated the non-exchange taxes and grant revenue recognition requirements. And so the exposure draft, the first half would be the categorization part. How do you break apart the two types of transactions, what's the basis for that, and then would deal with those non-exchange type transactions. How do you recognize, how do you measure them? What are the changes? Lots of illustrations, lots of examples, be sure people really understand it. And then in 2028, we would get the back half of the exposure draft, which would be those exchange transactions, which is really where a lot of really new guidance comes in, where we haven't had guidance before. And of note, as part of trying to make the standards as uncomplicated as possible, while that the gap we're building there is based on a performance obligation model, which does use many of the concepts and follows along with GASB or FASB Topic 606 that was implemented a few years ago. We are trying to make it work within the government environment and make it easier to implement than maybe 606 was, to the extent we can, by focusing on things that are important within the government environment, but not kind of overcomplicating things that really aren't as big a deal in our environment, but the FASB had to deal with. One of the ways, the things we're really doing that I highlight to our stakeholders is that for many routine common transactions, exchange transactions the government enters into, the accounting is not complicated, doesn't need to be complicated, and isn't kind of the problem with not having guidance today. So we're trying to have at the beginning of the model a kind of simplified way to account for those routine things that meet certain criteria that governments can really quickly, maybe by invoice, understand how to account for revenue and expense, but then build out this more robust performance obligation model for the more complicated transactions that aren't as simple, and really build that out. And so that's our plan, and what we've moved forward. During the third quarter, we spent a lot of time on those exchange transactions, in particular dealing with measurement and variable consideration. Moving on to the next page, dealing with our major projects, so not quite comprehensive, but not also practice issues. We have two of those. They remain on time and on target. The first of which is the infrastructure asset project. We are moving towards issuing an exposure draft early, I would say in 2026. The main thing we did in the third quarter was consider the disclosures that we added. This is the project where users were telling us they wanted more information about how a government was maintaining its infrastructure. And so the board had, I would argue, three main new disclosures being required. Two of them are moving forward to an exposure draft based on the board's tentative decisions. One of them was added to in order to get more and better information for users related to the age of infrastructure assets that are nearing the end of their estimated useful life. But then the third large disclosure that we contemplated in the preliminary views regarding how much the government has actually spent already to maintain those infrastructure assets, for cost benefit reasons, the board decided not to move forward with. I think you will see it anticipates, I think, based on the last board meeting, you'll see two actually alternative views, one of which is a board member saying that we shouldn't have taken that one disclosure regarding actual maintenance out. That's really important and valuable information for users. And then you're going to see one board member who thinks there are parts of what we've provided that are just going too far and are too costly. Some might argue that means we found the right in the middle, but all of those two different alternative views will go out in the exposure draft so that we get information from stakeholders that might agree with one or one of the alternative views as opposed to where the board ended up, or maybe that the board ended up in the right place. So again, 2026 early, we would have an exposure draft issued on that project. Next, and other major project is our going concern uncertainty severe financial stress project. We did have the 90-day comment period on the preliminary views end at the very beginning of the third quarter. We had a series of 3 public forums, which were a little bit of a different format from our traditional public hearings and user forums. In these, we had 3 different sessions where each session brought together 8 to 10, some preparers, some auditors, some users, making up the 8 to 10 people who sat in a roundtable format with the board and the staff to talk about the preliminary views, elaborate on their comment letters, and have a good, robust discussion. I think we learned a lot as a team and as a board from that great input from those public forums. And then we begin the fourth quarter starting our redeliberations there. I will say of note that the AICPA, because of the interaction between the audit literature on going concern and the accounting literature on going concern, they're very interested in this project. And we are having meetings with the AICPA, including the Auditing Standards Board, about their views on this to make sure that the standards work together as well as they can. With that, I will turn it over to Alan to talk about the remaining projects on the agenda.
Thank you. And I'll start off by talking about two of our practice issue projects, right? The first one is subsequent events. It's interesting because when we did the research on subsequent events, I think Joel and I would have said we don't need a project. But this is an example where we are trying to advance and improve GAAP, because when we did that research, we looked at governments who had issued debt after year end before they issued their financials. We went to Emma and said they've issued it, and then we pulled their financial statements and said, do you have a subsequent event? It says you've issued debt post year end before you issue your statements. Now, most of us would sit here and say, that's kind of a waist-high fastball. That's a very obvious yes. We found 30% of the governments that didn't have the disclosure. Now, that tells us there's something in the words in the statement that's not getting them to realize that's a subsequent event. And so this is a project where for us, that's the improvement. We get more people realizing they need the disclosure when they need to have it. The intent was never to really drastically change what a subsequent event is. We're just trying to close that 30% gap, is what it amounts to. So part of that is just providing better criteria. In some cases, taking a little bit of judgment away. The standard is now going to say, when you have a debt offering that's material after year end, that's a subsequent event. There's no judgment there. It is if it's material. We've added a couple other things to that list as well. And then the last thing would be a catch-all bucket for judgment. But the point is we're trying to eliminate the variability in when someone didn't realize they should have had it. And research told us there was that 30% error rate, hence we needed a project. Start redeliberating in April. We will get final on it at the next board meeting. So this will become Statement 105, assuming the board decides to issue it in December. It right now would have an effective date. If you're a June 30 government, it would have an effective date of June 30, 2027. So they'd have a while to even implement this. Even while we're not drastically changing what the words are, we're trying to be responsive to resource constraints governments have right now and other workloads governments have right now and saying, okay, simple to implement, lower bar to implement, but still give them time to actually implement it. So June of 2027. The other item on here is an implementation guide update. We put out periodically questions and answers. It's GAAP. They are authoritative. Basically says, here's a fact set, here's a question, and here's an answer to that fact set. When we did Statement 103, the financial reporting model reexamination, one of the main things we did there is we talked about what is an operating revenue expense, what's a non-operating revenue expense. It's not by policy anymore. We've defined what non-operating revenue expenses are. One of the things that we defined that to be were subsidies. As you can imagine, governments get subsidies periodically, especially a higher ed group getting a subsidy from the general fund to actually keep tuition rates low. So we're now saying that's a non-operating revenue to that higher ed institution getting money from the state. Problem is that's a new term. We've never used the word subsidy before. So you can imagine you issue a new standard, come back, start getting questions. We've decided we're going to issue an implementation guide to try to answer questions directly related to subsidies. We're trying to do it now because between now and June 30, they'll be implementing the standard. So let's try to get them some of these questions and try to clarify some of these discussions of what a subsidy is between now and June. This implementation guide update is limited to subsidies. Part of that's just to keep it narrowly focused, keep it constrained, and do that so we can also do it quickly. Again, trying to get it out before hopefully sometime next summer when they be implementing Statement 103. Those are both those two projects. If you transition to the next slide, master page 114, you'll talk about we have a technology project new to us. In our technical agenda, we've never had a technology project. What that is really is voluntary digital financial reporting. And essentially what that is us building a taxonomy for state and local governments. So state and local governments can issue their financial statements and they can be machine readable. It's voluntary. As of right now, there's nothing requiring them to do this at all. And that voluntary word is very, very important anytime we ever talk about this. But the one thing we will hear from the user groups especially is it takes a very long time for them to get state and local government reports in their possession and use them for analysis. Part of that's the 6 months it takes to issue them. Part of that's also the time it takes them to take 9, 10, 1,000 PDFs and convert it to data. So if you think about that, right? So part of this project is providing a tool to governments to use if they want to, that will allow them to provide their ACFR in a PDF machine readable format. We like to say the last thing you do currently today is you hit print to PDF. In the new world, you hit print to X, print to taxonomy, print to machine readable. And so it's just one extra step. We think it's important to do that. Again, voluntary. This will never be statement 10XX whatever. It will be something we provide as a benefit to the government and a benefit to the user committee. We have a consultative group. They've been meeting. They provided feedback. We're starting to get into the weeds of what does it mean and what line items mean what, and what level of detail we should provide in the taxonomy. That's a pretty interesting conversation when GAP has a lot of flexibility in it. So that's been interesting for the board to walk through. The TCG, the consultative group, will meet with the board in December. We think that's really important, and we will put out a due process document, a discussion memorandum in mid-2026, and that's really a staff document that will tell the folks, our stakeholder community, this is where we're going. This is some of the architectural type decisions, fundamental type decisions we've made, and get their feedback if it makes sense. And so we can actually keep moving this forward. This will be a project that will take some time to finish. Taxonomies don't happen overnight, so it's going to take us some time to get this done, but we do think it's important to keep focusing on it. A couple research projects that we're going to talk about on master slide 115. Before I talk about any of them, I'd like to remind everybody, when we do research, some folks I think don't always know this is true. When we do research, that doesn't mean there will ever be a standard setting project. Sometimes the research is to decide or to even think about, could there be or should there be one? You look at the very first topic on this list, right? You look at cybersecurity risk disclosures. Most folks in this room would say, well, there's probably a lot of people that have a lot of interest in that topic. And the user committee would say, yes, they do. And you can probably imagine the prepare and audit committee will say, oh, please don't. I mean, it's true. It's a very sensitive topic. And so what we're trying to do from a research perspective is understand the landscape, understand what there really is, understand what users might want, understand what governments produce today, what do they provide today, what are they required to provide, and then ask the question, I think the most important question is, what information should we or should we not require them to produce in the audited financial reports? It may be that some of this information, while useful, should be provided in another avenue. It may not need to be provided in NACFR. And so part of our research is to try to figure that out. And it's really now about mitigation activities. What do you do to not be suffer a cyber attack, even though that might not be possible? And it's about how do you recover from it once you have? And either one of those topics are something that should be in NACFR or not. We don't know yet. The board will get a paper on this probably first part of 2026. And the board will have to make a decision on whether or not it's a project they actually want to follow up on. But we're very sensitive to the topic in general and the sensitivity of it, and even to the extent of not putting the government in a situation where now they have a target on their back. That'd be something that we're very sensitive to. Pension OPEB disclosures, that's reassessing current disclosures, current pension, current OPEB disclosures in light of Con 7, in light of this refined, like to say, definition of essentiality. It may result in some disclosures not being here. The other thing it may result in that I will tell people all the time is, we hear a lot, we produce all this report and no one uses it. The nice thing about this Con 7 objective, especially with pension OPEB disclosures, is we're going to go out and ask people, how do you use it? And they're going to provide us feedback that says, here's how they use it in a meaningful way to affect decisions and that's accountability. We'll now be able to go to preparers and auditors and say, this is how they're using the information. And I know for a lot of preparers, that's what they want. They'll produce the work. They just want to know someone's using it. So I do think one of the natural byproducts of this process is we're going to know that then. We're going to know that it's being used. And I think that's really important. I think sometimes that gets lost in the focus of this project. Revenue expense recognition, that's a project we've put on pause until we get further along down the path of RER in general. And the GAP structure is us just really looking at, we have different layers of GAP. We have level A and level B. We're very unique in that sense. Most of the other standard setters don't. They have one level of authoritative GAP. And this is just us asking the question of, should we be the same? Should we make changes to our GAP structure or not? Again, research, we don't know. But I think it's important to look at that and ask that question. The last slide would be on slide 117. And this is just PIR. We're doing PIRs just like FASB is. FASB just completed one on leases. We're working one on leases. So we're doing one on OPEB right now, on fiduciary, statement 84 and fiduciary funds, and one on statement 87 for leases. They are all working towards being closer to completion. The next one we will have complete will be next December, will be OPEB. And then we're working toward fiduciary, and then ultimately working towards leases. And leases is the one that probably gets the most talked about in our stakeholder community about leases. And a lot of the reasons it gets talked about for a lot of reasons that we all know, but we're working towards trying to deal with where we are in that. I think the PIR process in general to us is really important for us to know, are we doing what we thought we were going to do from a due process standpoint? Did we accomplish the objectives we thought we were going to accomplish? And did we get cost benefit right? And that's what PR is trying to do. And we'll do it with these three topics as we've done with the other PR reports we've produced. That's the end of our presentation. If anybody has questions, be glad to answer them.
Any questions?
Manju,
Sure.
Thanks, Manju. I have one, and just not even a question, but maybe an observation on the pension and OPEB disclosure Con 7 discussion that you just shared, Alan. Good job on that. I'm anxious as a practitioner to hear the outcome of that. And you're right. More so than anything is to provide information to the preparers and the practitioners on information that's used, how it should be used, because that will help us explain to our local government clients the why of those disclosures, but also the things that they should be looking for and how they should use it in managing their local government. So that's a good one, and I'm anxious to hear how that comes out. Rick, one other thing that I'll highlight that isn't kind of on the technical plan anywhere, but we've talked about before, is that we are working on our senior research manager, Tammy, is working on a series of videos that are geared towards elected officials that walk through all sections of the financial report, but in small, 5 less than 10-minute sections. And the idea would be this explains what this section of the report is, and this is how, as an elected official, you could use the information that's provided in here. Pension and OPEB disclosures is actually one of those sections. And so I think that while we're gearing it towards elected officials, citizens could use those videos, practitioners, preparers could use those videos to help them explain to their elected officials how to do that. So that's another thing we're doing similar to what you talked about that I think will be helpful to them. We hope they're being recorded and kind of produced now, so we're releasing them probably really early 2026. We look forward to those.
Just a question on your subsequent events project, which makes sense and I support. But as I'm hearing, is 70%, we all recognize the importance of disclosing the subsequent event. And then what I'm hearing is 70% of the issuers are doing it. And so we're trying to address 30% by tweaking the language. And the new language, the new standard won't be in effect till June 30, 2027. What message are we sending to the 70% that seem to be doing what we want them to be doing? Are we saying keep doing it? Or are we saying you don't have to do anything till June 30, 2027? Are we creating a gap there? And are you thinking about that, and how are you addressing it?
Louis, I think from my perspective, if I was in that 70% group, I was doing it consistent with the current standard says. The new standard is not going to change what I would have done. So I would do exactly what I've done in the past, because if I thought a bond issue subsequent year was a subsequent event now, the new standard is just going to reinforce the fact it's a subsequent event. So I would just keep disclosing them like I already was, and I wouldn't change a thing. What we would hope, and we even say it in the standard, we always usually, I think we're doing I think the board will next month, and 105 early adoption is encouraged. So we actually hope is that 30% folks will actually adopt this early and start providing the disclosure they're not providing right now. But if I'm in that 70% bucket, I don't think I change anything.
Right. And we would, and GASB would send a message to that effect, more or less, in the language you would issue. Okay, thanks.
I see no other questions. So thank you, Alan and Joel, for your reports. And now I'm going to turn over to Chair Rich Jones for FASB report.
Great. Thanks, Manju. Thanks, Lara, and welcome everyone. It's my pleasure, Jack and mine this morning, to give you a bit of an overview of the third quarter activities here at the FASB. Suffice it to say, it's been a busy quarter, and that'll continue through the end of the year as we really wrap up the standard setting related to our 2022 agenda outreach. You also hear a little bit about not only what we've done, but where we're headed. And when I say where we're headed, it'll really deal with us addressing all the great input that we've gotten as part of the 2025 Agenda Outreach Initiative. Starting on slide 120 in your materials, this is a bit of an update on really the standard setting that we've done. If you look here, while this isn't certainly all the standard setting that we've done over the last few years, it does highlight some of the more significant standard setting that came out of the 2022 Agenda Outreach Initiative. And I'm happy to say that we've made great progress on addressing those the stakeholder input that we got and making significant improvement to financial accounting and reporting. As of 9:30, 7 out of the 9 agenda items that were on our technical agenda were voted out by our board for final standards. So what does that mean? That means our board fully deliberated and redeliberated all issues related to those standards. We voted to move forward with a final standard. And then we turn it over to our staff, and they have the hard part of making sure that all that wording is correct and making sure our board members are comfortable with that wording and it gets incorporated into our COD. So Jack will give you an update on those standards that have finalized during the third quarter and a little later in this session. But since that date, we've also added 2 new projects to our agenda. And what that is that's the success and our board addressing input that we've received from the ongoing 2025 agenda outreach. So I would caption this slide as this is where we've been. And if you think about 2025, this is where we're going as a board. Let me turn over to Jack to summarize some of the due process milestones during the third quarter. Jack?
Okay, thank you. I'm going to master slide 121. And the story that I want you to take away from this slide is that we've made steady progress. You'll see, and I'm going to walk through 3 completed due process documents and an ED that was issued. But I also want to point out too, the fine print down there talks about 7 more documents that'll be out in either the fourth quarter or early in 2026. Which have been voted out. So I wanted to point that out just to show that besides working on the agenda items, we're also responsive and flexible to topics that come in through the PCC, the EITF, or other requests in response to emerging issues. So you might stop and think that's a lot coming out before the end of the year. How is that going to impact preparers? We're very conscious about the timing and how all the preparation and implementation interacts, and we've looked at those various factors and staggered effective dates, and I think they go out through as late as 2029. So we are cognizant of that issue. So if we go to master slide 122, this was the first document that was issued in the third quarter. This relates to trade accounts receivable. It was a PCC item that came up, and its intent is to reduce burden while not losing sight of the information that investors need. It assumes that the current conditions for current account receivable and current contract assets from 606 that are going to quickly be repaid are appropriate to make the estimates of credit losses. So it also allows private companies who have extended reporting period to think about and can take a look at cash collections, what's actually been paid, and in making their final estimates. We made sure this was okay with investors by talking through them in targeted outreach and also through our advisory groups. And we've received a lot of positive feedback. All right, if we turn the page, master slide 123 is on internal use software. We took this project on, or the board took this project on, to modernize software accounting for changes that had occurred over time in how software is developed. In other words, to address the use of the agile method instead of the old waterfall method. We've talked about this in the past with you. You will see on this page that there was more outreach, more advisory groups and the like. That's because this is a broader project, and it was also a bit of a journey. The board started out with the idea that there would be a single model for both internal use software and software to be sold, the accounting for those costs. They ended up pivoting a bit along the way. Why? Because they talked to investors who didn't want to see significantly more capital or significantly more costs capitalized. They wanted to understand how that was flowing through the expenses. So outreach was over 300 instances, 348 stakeholders, and that contrasts to the 40 or so comment letters that we received. And I wanted to point that out because when we receive comment letters and go through the process and we're preparing as a staff helping the board, we do extended outreach and sometimes significantly to make sure that we're making good recommendations. And I think that is helpful in moving the projects along. So we go to master slide 124. This is derivative scope refinements. Then this too is another maintenance project. What had happened was over time in the development of transactions, what was being deemed to be a derivative kind of expanded by practice by others in the ecosystem. And the board said, look, for contracts that relate to the company's operations or to a counterparty's operations, those don't seem to be derivatives. Those are better otherwise accounted for under the appropriate GAAP. And they issued a standard, the board issued a standard to make that clarification of what is and what is not a derivative more clear. We have balanced feedback and a positive response to this document as well. So I'll move on to master slide 125. This is on PIK dividends. And you say, oh, what's this all about? This is an EITF issue, very narrow issue. This is how to account for PIK dividends of equity classified preferred stock. So think about how many people have equity classified preferred stock. Not that many. Accordingly, there were only 9 comment letters and a handful of outreach instances, 19 or so. The comment deadline was October 27th. This is moving through the process. In fact, I looked at the next board memo already and gave the team comments this morning. So that'll continue to move along, hopefully expeditiously. Yeah. All right, master slide 26, and then I'll pause. This is all about the 7 in the fine print that I told you about when I started talking. We're making progress. The board is making progress. I think all of these have been voted out, and a number of them are in production already. And purchase financial assets, which is now called purchase loans, was issued last week. So I'll stop there.
Okay, thanks, Jack. So, you know, there may be different views, 3 due process documents in a quarter, but as you can see, the FASB and our staff have been very busy finalizing these projects. Varying degrees of scope, right? Some of them, the scope of derivatives will be broadly applicable, and that will affect a lot of entities. Others, paid-in-kind dividends, as Jack mentioned, a little more narrow and targeted. But nonetheless, there are issues that are identified with our current codification, where we, as the standard setter, we don't just get to do big projects. We're also responsible for maintaining the effectiveness of our current codification. If you go on to the next slide, it provides an overview of our, quote, other projects overview. And just as a refresher, the research projects are projects on our research agenda. That agenda is controlled by the chair, me. And the way I use it effectively is when I think that additional information and research by our staff would benefit our board in making an assessment on whether or not there's standard setting to be done there. What is the issue? Better defining the issue. What is the objective of standard setting? And then our board makes their decisions on it. Are they interested or not? And if so, what path would they like to go down? Probably one of the more important projects on that research agenda is that's where our agenda outreach efforts reside. So the invitation to comment that we issued, and I'll talk about in a few minutes, that's included in that research agenda. You'll also see the Emerging Issues Task Force added an additional project to their agenda. A couple things there. One, we certainly benefit from a very talented group of stakeholders on that group. It's people who see things before generally we will see them, can identify issues with how accounting standards are working. Are they appropriate? Where is there diversity in practice? Where are there challenges in applying our guidance today? Or where is there maybe an output that people may not totally realize when they're looking at the financial statements, recognizing how important that is. As a reminder, the EITF doesn't set standards, but what they do is talk about issues in depth and provide a recommendation to the board on whether or not we should add something to our agenda. And if we should add it, do they have a recommended solution? Once they've done that, it comes to our board and we go through our full due process. And you've heard that on PIC dividends. And then the final item, and Jack will cover this in a little more detail, is the post-implementation review projects. As a reminder, post-implementation review does two things. One, it helps us assess how a standard, did it meet the objectives the board had when that standard was initially issued? That's the first objective. But the second, which I actually think is even more important, it's what are the lessons learned from that post-implementation review so that the next standard we set, we can benefit from those learnings as to our process, as to our outreach, as to the cost-benefit analysis. Moving on to the next slide, slide 128, gives an overview of our 2025 agenda consultation process. So I will tell the Oversight Committee you'll be hearing a lot about this for the next year, but this gives you an overview of the process that we've talked to the committee about in the past, as well as a couple updates. So just as a reminder, back in 2024, we did outreach with over 200 stakeholders. We asked them a very simple question: what do you think should be the FASB's priorities in standard setting? That group wasn't shy. They shared with us lots of ideas. We used that to populate the invitation to comment that we issued at the beginning of this year, which simply included what we heard from those stakeholders. It didn't have Rich Jones or the other FASB board members' views on those issues. It simply repeated what we heard. We issued that document as an invitation to comment. That way, all of our participants, all of our stakeholders can participate in the standard setting process and telling us what they thought our priorities should be. I will tell you the response rate was terrific. We got over 130 comment letter responses, and they're not as simple as do this or don't do that. They went in depth as to what issues they really thought should be our priorities and what issues shouldn't be our priorities, because the standards that we don't set are just as important as the ones that we do set. So what should we focus on? The result of that was 72 items that were recommended that the board do standard setting on. Now, practically speaking, we're not going to do standard setting on 72 individual items. But what we will do is bring all of those 72 items back in front of our board in public meetings to share the perspectives, share the outreach, not only from those comment letters, but the additional outreach that our staff has done, and have our board make a decision, should we add that to our agenda or not. Similar to the 2022 agenda outreach, we'll close out this process with a report so that all those people who took the time to provide their input can see ultimately what the board decided on. We're targeting doing that sometime in the latter half of next year, which means that we've got to bring those 72 items with all the staff work that goes behind those back in front of our board between now and sometime in the middle of next year. Our staff's been working on that, diligently working on that. We've already added 2 projects to our technical agenda as a result of that process. But we'll be talking about those in public board meetings throughout the next year. If we move to the next slide, first, it's a really busy slide. Don't worry, you don't need to read it. I simply presented it for the point that, and what it does is it provides an overview of some of those 72 topics. And there's yellow and there's green. And you can see yellow means that someone thought a project should be low priority. Green means someone thought it should be a high priority. The only takeaway you need to know is that it's very rare you get something that's all green or all yellow. You get different perspectives. And that's where the work of our staff, the input from our stakeholders becomes very helpful. Because I'll give you a couple examples here. One is that we heard fairly consistently from the prepare group that there was too much, there were outdated disclosure requirements. And then we heard from some investor groups that very clearly they needed more disclosures. So, and on the surface, you'd say, well, what are you ever going to do with those totally diametrically opposed views? Well, when you start digging into them, when you talk to investors, they're saying, we really just want to really understand the business. We understand the economics behind the transactions. And we don't find that Disclosure X provides that. When we talk to the preparers, we find, well, we spend all this time and all this effort preparing this disclosure, and we don't think it effectively conveys the underlying economics of our transactions. So you start pulling those together, and there is probably a little more in common than people would think, particularly by simply looking at that input. So the challenge for us as a board, the challenge for our staff is as we weigh through that input, which sometimes is very opposed, very diametrically opposed from one group to another. How do we set the priorities? How do we think we can overall improve financial accounting and reporting and meeting our cost benefit obligations? So with that, let me turn over to Jack, who's going to give an update on PIR activities. Jack.
All right. So quick update on PIR. First of all, let's talk about credit losses. We continue to monitor the implementation of CECL and engage with stakeholders. A couple of things that have happened recently, I already mentioned them, and that is the trade AR standard was issued in the third quarter, and in the fourth quarter, revised guidance on purchase loans. In addition to that, we are working away as a staff in beginning to gather information and analyze it in anticipation of finalizing and issuing a report on the PIR. In fact, I met with the staff last week. We're from an oversight perspective, I'll say that we are going down the same sort of model and same sort of reporting. So you should expect to continue to hear updates. We recently have met with all the different advisory groups and started talking to them about CECL, what they have encountered, what information they're getting, the quality of the information, and the like. We're also in the process of starting to review academic studies and going back through all our old implementation activities and trying to draw conclusions about that. With regard to leases, I know we previously discussed this with the Oversight Committee, but over the third quarter, there was a roundtable, kind of a final roundtable to understand the activities of leasing and how it impacted our stakeholders, both from the quality of the use of the information as also the various costs. We also discussed leasing with the various advisory committees that met during the quarter and also had board meetings. With regard to that, we are in the process of working on a final draft report, which we have explained previously. So I'll stop there.
Great. Thanks, Jack. And maybe one takeaway from the PIR process I'd add is the ultimate outcome generally is a no surprises type report. I think with the transparency that we provide, either whether it's the Oversight Committee public meetings, whether it's part of our board meetings where our staff does full summaries and updates as we progress, whether it's our discussion with our advisory councils, it's a journey that we share all the details of transparently. And as Jack mentioned, we're looking forward to putting that report out publicly here in the fourth quarter. Finally, the last slide talks a little bit about our investor outreach report. So I'm happy to say that we've issued our 5th annual investor outreach report here in the third quarter. I must say 5 years ago when we issued the first annual, I was a little nervous. Would we have a second annual? But I'm happy to say we are up to the 5th. And one of the questions you may have is why an investor outreach report? Why not a preparer outreach report? Why not a practitioner outreach report? Our interaction with investors is slightly different. When you think about it, our job is to write accounting standards, but the product of those accounting standards is financial reporting and accounting used for capital allocation purposes. To spend time with an investor and bring them through paragraph 8 of some very lengthy standard is probably not very helpful, but spending some time with them and talking about the output from our standards or our proposed standards, it's a different dialogue. So we make a great effort as part of that investor outreach to make sure we're having the discussion in their terms. The other piece is we tend to get comment letters more from preparers and practitioners. So it's a way of us adding that transparency into that third leg of our three-legged stool of stakeholder input about how we interact with investors. So the report's out there. I hope you take a look at it. I think you'll find it interesting, and we are always looking for ways to increase the participation from all of our stakeholder groups, including investors. So any ideas are greatly appreciated. So with that, Lara, Manju, that concludes our report for the third quarter. If there's any questions.
As always, thanks, Manju. Rich, but I might get the timing incorrect on this, but I think it's been about a year since you revamped the EITF and the process. First question would be, are you happy with the revamping? And secondly, is there anything that you're looking at even retweaking some more with that to get more from that group of individuals that you want?
Sure. So am I happy? Sure. I would, when I look at the talented group of people we have, they're investing their time and effort to help us improve financial accounting and reporting. That's been terrific. I think that there might have been, we've made some efforts to make sure that all of our stakeholders recognize that that's another avenue to get some thoughts on potential standard setting. And some might have thought that was intimidating a little bit to submit an issue to the EITF, or what would that mean if I submitted an issue? So we've increased the transparency there, making sure that all of our stakeholders know that that's an avenue available to them. So I would say so far operating as intended, but obviously always looking for ways to improve that. I will note that I believe as of today, Jack, they've sent us 3 issues as a board. Is it 2 or 3? And for every issue they've sent us, we have added to our agenda and moved on to either an exposure draft or a final standard. So far, everything we've been getting from them has been terrific.
Other questions? I don't see any. So thank you so much, Rich and Jackson, for your reports. And we will move on with the next item, and that is Sue Cosper is going to give us the report. She serves as the FASB Liaison to the Private Company Council. Take away, Sue.
Thanks, Manju, and good morning, everyone. Our last PCC meeting was held on September 25th and 26th. It also included a joint session with the AICPA's Technical Issues Committee, which is a group of practitioners that are very interested in PCC activities. The liaison report is in your materials on page 132. And there's also the agenda and the meeting recap, which is included later in the materials on page 178. The meeting was very productive in September. There was active engagement. It was a fun discussion as they talk about their agenda priorities and sort of learning from each other, and particularly on certain of the topics, the investors advising the members on how they use information. So it was a very engaging discussions. Maybe just a couple of highlights. They discussed research on further refining their agenda priorities. They also talked about the FASB's agenda consultation initiative and provided some feedback on their project, on our projects. They also talked about the research initiatives of accounting for intangibles and key performance indicators. I would say the joint discussion with the TIC, with the Technical Issues Committee of the AICPA, really focused on the PCC, almost performing outreach with the TIC on some of what they're thinking about as it relates to their agenda priorities. And then there was also the normal updates from the FASB staff on just existing projects and the sort of the status of those projects. And maybe just turning to town hall and liaison meetings. We've had a couple of meetings, town halls, since we last met with you in August. And those really were the Construction Financial Management Association and ProSite, which is ProSite is really made up of community bankers. again, a lot of great feedback from ProSite and both the CFMA on what the PCC is considering as part of their agenda priorities. And then there was one additional liaison meeting. It was with the FASB and the PCC with the Auditing Standards Board's AITF, which is the Auditing Issues Task Force Subcommittee. And so we oftentimes will share information about our projects and how they may impact what they're doing in terms of setting auditing standards. So maybe just a couple of other things. There's a webinar today for private companies and not-for-profit entities this afternoon. And then the next PCC meeting is going to be on December 11th and 12th. So I'll pause here for any questions, or I think Rick's going to comment as well.
Questions for Sue? Thank you, Sue. Thank you for your report, and we'll move on to, at this point in the meeting, we will invite people to share their observations of the meetings that they have observed. So the first one is it you, Rick? Excuse me. Sorry. Yeah, lost my slide. There it is. PCC meeting observation report from, I'll call on Rick Reisig, trustee Rick Reisig first.
Thanks, Manju. And that's why I didn't have a question, probably because I'm on the next speaker. But just a couple of observations. First, very specific to the meeting. Sue mentioned very engaged discussions. The only thing I have in my notes is the bankers really came to play. So the PCC group is made up of course, practitioners, preparers, and then user group, which would representative of bankers, surety folks, and so on. And in this meeting, they really came to play. There's sometimes they have to be prodded. But once they get going, they got going. Well, they didn't need any prodding in this one. So I think the topics that were part of the agenda were very much akin to what they do, and they wanted to share, which is fabulous. So they really did a great job. The second comment is more general, and because this is my last time as far as reporting on the PCC, but Jerry Shaver does an excellent job, as do Rich and Sue, in drawing out the perspectives of the participants. And from Jerry's perspective as the chair of the PCC, if somebody isn't participating much and he wants their input, he'll directly ask them for their input. And that gets the juices flowing, obviously. And he did that in this last meeting. He does it all the time. And that's one of Jerry's great strengths. So he's doing a good job there from an oversight standpoint. We should be happy with that because he does a great job. From Rich and Sue's standpoint, they're always great about asking the next question of the PCC. And if they deliver a comment, they'll ask the next question to get more out of them because they use that to help them in their standard settings. So they do a great job with that and makes the PCC folks, I know it makes them feel welcome and respected and part of the group, and makes them feel worthwhile with the process that they play in the standard settings. So kudos to Sue, kudos to Rich for what you guys do with the PCC. So again, from an oversight standpoint, I think we should be very happy with how you interact with the PCC and then use the information and use their intellect, the time that they devote to that in the best way possible. So good job to you guys. That's all I have.
Trustee Marion G. also observed the PCC meeting in September. So Marion.
Thank you, Manju. So as many of you know, the FAF Oversight Committee is tasked with proactively overseeing the activities between the Private Companies Council and FASB. Also, we want to ensure that FASB engages in adequate consideration of private company financial reporting issues throughout the cycle of its standard setting process. So the FASB participated in the meeting with the PCC along with, as Sue mentioned earlier, the AICPA's Technical Issues Committee. Just a couple of the topics that were discussed during the meeting included lease accounting simplifications. We've talked earlier in this meeting about this particular issue. And so there's a lot of discussion during the meeting related to that matter. A couple of other items that they covered were debt modifications and extinguishments. I won't get into all of them, but also there was a discussion regarding embedded derivatives. So the one observation that I had was that I thought the diversity of the stakeholders that participated in the meeting, it led to more of a robust discussion. You heard Alan mention this morning about GASB's public forums and ensuring that you have all the stakeholder groups in one meeting. And I saw that in this particular meeting, you had folks that were preparers, you had investors, auditors. So if there was an issue that needed to be discussed, we did not have to wait to get immediate feedback. I thought they were very good at offering their opinions. As Rick mentioned a moment ago, I also think that Jerry and Sue and Rich also did a good job of kind of ensuring that everybody had an opportunity to provide their input. And if someone was, kind of quiet, we would they would direct questions at those individuals so that we got that feedback as well. I'm also pleased to report that I thought the attendees did a good job of kind of focusing on the due process objectives of the FASB standard setting process, which, as you all know, involves there's a research component of that, and then it goes all the way through post-implementation reviews. So I heard some comments regarding just that process, which I felt good about because it leads this committee to believe that they are serious about following that process and ensuring that everybody has an opportunity to provide input on the standards throughout the development process. So that's all I have to report. I thought it was a very good meeting.
Thank you, Marion. So our last item on the agenda is any other meeting observations by trustees in the last quarter. So I am going to call on Trustee Rick Reisig again. He observed GASB meeting back on August 11th. And unfortunately, we missed calling on him for observations at our last quarterly meeting in August. So I want to give you time if you want to, or we'll move on with something.
Actually, I think this was because it was after. I think it was right after we met in August. But let me just mention that in my observation, really to echo what Alan talked about earlier in our meeting, as far as that forum, that public forum, and how it really did work. And the one note I had, I thought that Deborah Beams, I think, was the staff person that was a moderator. She did a great job with it, and I'll get to that in a second. But as you described it, Alan, you had all these folks together, and at the very beginning, their responses were very structured, somewhat measured. There's things that they wanted to get out, and they did. It didn't take very long, where it was just a free flow of discussion. And as you described, Alan, the GASB members were there, and I knew they were there, but you never heard them because they were listening. They let the forum folks take it away and do the conversation. And the strength of Deborah towards the end is as people got more comfortable in the discussion and they started sharing their views, they started asking each other questions, which was great. But Deborah had to kind of keep them in line because it's like, okay, we're here for purpose and we're here to talk about a topic. And yet that just, I think, describes and echoes, as you were describing, Ellen, the benefit of the public forum and how beneficial it is, and to let these folks coming from different perspectives share their thoughts and listen to each other and engage with one another and use it as a learning tool for them too. So just as you described, Alan, great tool, and I'm glad you're continuing on with it, but good session. It was great to listen to.
Okay, thank you, Rick. And finally, we also had Trustee Lynette Pally observe meeting of the Public Markets Advisory Committee in November. So Lynette, will you please share your observations of that committee meeting?
Great. Thank you, Manju. I'll be very brief because I will share and mimic exactly what my fellow trustees had said about the process. It is robust. It's taken very seriously. The FASB members at the PMAC meeting were all there, very engaged, listening. The participants felt very free and open to contribute. So it was a very robust dialogue. Amazing staff support, Alicia, and probably many others. It was clear that the materials were, put together very well and people were prepared. I was just, they got an update, of course, on everything that we've talked about so far today, and a very robust conversation about CECL and leases and use of technology in the accounting profession going forward. So it certainly accomplished all of the goals of this oversight committee and the full board. I had made the observation earlier that those who are close to that process of getting soliciting input and giving input totally understand how essential that process is to our standard setting goals. But maybe we can think about making sure that a broader group of stakeholders fully appreciates how much work goes into this part of our due process and really listening and soliciting feedback from others.
Thank you, Lynette. And with that, we have now reached the end of our public session of the FAFS Oversight Committee meeting. Again, many thanks to those who tuned in to today's webcast. And please note that the next Oversight Committee meeting will be held virtually on Friday, February 20th, 2026. Hope to see you all then. Thank you.